Good morning. Welcome back to the Broadcast Retirement Network. This is BRN Weekly for Saturday, June 22nd, 2024. And our top story today, the stock market's volatility gauge remains subdued. And joining me now to help break things down, Jane King joins us from the NASDAQ. Jane, always great to see you. Thanks so much for joining us on the program this morning.
Oh, great. Great to be with you, Jeffrey, as always.
And let's start off with volatility. How's the volatility index and how's the market doing as a result of the volatility?
Well, it doesn't feel all that volatile right now. I mean, we've been hitting record highs, so we've just been going straight up. I think markets and makers and investors would maybe like to see us take a breather here. It felt like Thursday we kind of started to we even hit set record highs Thursday morning and then closed lower on the day. And a technical analyst would tell you that that's a sign of at least a breather in the near term. So we'll see, but I mean, we've hit 30 some record highs in the S&P 500 this year. Nasdaq's up 8%. We're not even through June yet, so a bit of a breather, a pullback would not be all that surprising.
And did the Juneteenth holiday, which fell on Wednesday, so there was no trading, did that have any disruption or interruption? Not the Juneteenth part, but the holiday, no trading. Markets were closed. Did that have any type of interruption
And
during
right
the
in the
week?
middle of the week, so it was kind of strange.
Interesting, right? I mean, you never
Yeah,
really have, other than maybe Christmas, New Year, you never really have a
right, because most of them are
in-week,
like
midweek
Memorial
holiday.
Day or Labor Day or Good Friday. Yeah, most of them were kind of tacked onto a weekend. But I did feel like Tuesday was a little quieter than normal. So I don't know if it's a fairly new holiday. So I don't know if, people started like kind of just taking the day off or whatever. It was interesting. Not a lot. Federal workers had the day off. The markets were off. Post office was closed. I believe the banks were closed too. But there were a lot of people working on Wednesday. So just the overall economy didn't have that much disruption. And I feel like the markets are really focused on, NVIDIA, what's NVIDIA doing, the Fed, interest rates. I mean, that still remains the focus.
You bring up NVIDIA Tuesday. I think they eclipsed Microsoft as the largest by market cap company. Now they regressed a little bit, I think, later on in the week. But
Yeah.
what do you make of that? Because we were talking when you and I first started, talking, and you came on the program. Apple was the big dog, and then Microsoft and
Yeah.
Amazon was climbing. So what do you make of NVIDIA's ascension to what essentially is Mount Everest?
Well, they're an amazing company. I mean, there's no doubt about it. And they're in the hottest field that there is in the market right now, and they make the best chips and they're in demand. But it does feel like it's maybe getting ahead of itself. There's a lot of other competitors coming into this space. Intel's making chips and Taiwan Semiconductor. And so everybody's kind of seeing how well NVIDIA is doing, and they're working on their own AI chips. So while NVIDIA is the big dog, there may be some other competitors coming up over the next few years. And it looks like there's going to be enough demand for AI chips to be good for everybody.
Yeah, and Jane, do you think it has something to do with the CEO dressing in the leather jacket that we discussed last week? I mean, he's hip, he's
Yeah.
cool. I mean, do
Yeah.
you think it's something to do with that?
Well, I look at him and I think like how much pressure like he's got on him. I
Oh
mean,
yeah.
all of a sudden, I mean, his company is not just the hottest company in the world, but really at the center of geopolitics. And we could see, we're spending billions of dollars in the US to bring chip manufacturing back to the US. So because it's a national security issue. I talked to the president of Purdue this week, and there's doing a whole semiconductor a curriculum just to meet this need. So I mean, here he is at the center of all this. No doubt he's getting a lot of pressure. His company's he's a multi-billionaire now. I mean, it's you can envy him, but you can also feel a little bit sorry for him too. He's got a lot of weight on his shoulders.
Yeah, with the ascension comes all that pressure. That would crush pretty much everybody. It may crush him. I hope he's insured, and I hope he's getting the right health treatment. Jane, you brought up chip makers. AMD announced this week, I think, that there was a data breach. It just kind of goes to show you that they had a data breach. It just goes to show you that even the most sophisticated companies can be subject to these types of concerns: cybersecurity, data breaches, hacking, privacy.
Well, and these hackers are just getting smarter. I mean, it's like whack-a-mole. You figure out the exposure that you have, and then, you fix that, and then there's one right over here on this side. So, and then there was the car dealership, the software company that provides for car dealerships. It was also hacked, and that was a huge disruption. I mean, it looks like they're going to be down for a couple of days. So that caused a lot of problems there. A lot of these hacks are state sponsored. And so they have a lot of money behind them. And so it's something we're going to have to be dealing with. I mean, cybersecurity, that's a field to study, kids.
Yeah, absolutely, absolutely. I mean, I think it's AI, cybersecurity, and you're right. It is in a lot of cases state sponsored. We can name the names, but I think people already know them. Jane, do you go on social media a lot? I mean, I know that you are doing a lot of what we call in the industry hits day to day, and you're reaching out to like your stuff is your content is played on local syndicated networks. But do you have time to go on social media?
So I do post, I actually have a social media person that
Wow.
posts things for me. Usually, like I'll do some stuff, but he kind of takes care of everything on LinkedIn and Twitter. I don't have much time for Facebook. I did post something on Instagram this week because it was kind of cool and Instagrammy and was good. But Twitter and LinkedIn are where I'm usually doing my social media.
And what do you make of the Surgeon? I wanted to ask you because the Surgeon General, and this has nothing to do with anything that we work on other than chips, AI. But what do you make of the Surgeon General coming out and saying they want to put a warning for children? That takes me back to when I was a kid, and they always said don't smoke.
Right.
Uh, and you had the package, right? It's a lot smaller, but you had the package
Yeah.
and the warning. What do you make of that?
Yeah. Well, it's interesting because I have two teenagers and I kind of wondered, will this work on them? Like, I can see them pausing for a half second and going, and then I'm going to keep going. My son's the worst. He's on TikTok. I mean, he will fall asleep with his phone, like still playing videos. And I'll come over and just like take it out of his hand and turn it off because it's like, rah, rah, rah. I mean, he's just, and I try to, tell him, he does play a lot of sports. We did camping. He was outside playing volleyball and cornhole and things like that. So, but he's on it too much. So, I think it's fine. I don't have an issue with it. I just don't know if it's really going to make much of a difference.
And New York, where you are domiciled, you reside. Governor Hochul, I think is how
Yeah.
she pronounces her name, just signed into law the first in the nation privacy bill. So around social, I was going to say social security, but really social media.
Right. Well, and we've been talking about this for 20 years. I mean, it's been in front of Congress, and Congress refuses to act. All the social media companies have a lot of money and they spend a lot of
Yeah.
money lobbying. So if it does get done, I don't think it's would really be that effective.
Yeah. I mean, I go back to prohibition, right? You go back, I mean, I wasn't around then, you weren't around then, but prohibition, it became they banned alcohol for those who
Yeah.
don't remember. And basically people would kind of slip out and go to speakeasies and get
Right.
alcohol. So if you want it, you can find it, Jane.
Oh, that's true. And I always kind of compared like during the pandemic, like getting your nails done, like somebody come to your house. It was like a speakeasy. They could do
Yeah,
your
yeah,
nails.
right. Under
Yeah.
the cover, under
Right.
the darkness of night, they came with like their little medical pouch, but
So,
really it was
yeah.
doing to do a manicure.
Yeah, yeah. Just to get your nails done, or your haircut or something like that. It's like a speakeasy all over again.
Yeah, absolutely.
Yeah.
Probably not the way that, well, who knows? I'm not a lawmaker, thankfully. Jane King, always great to see you. Thanks so much for joining us and look forward to
Thanks.
having you back on the program next week.
All right.
Thanks, Jane. Always great to see you. Thanks so much for joining us on the program this morning. And when we come back, we take a look at some of our best segments of the week. You're going to want to stay tuned right here on BRN Weekly. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device. Welcome back. It was another great week of shows with great topics and great guests. We first discussed future-ready technology roadmaps. Let's take a look.
At Enterprise Iron, we work with a wide range of clients in both the private and the public sector, primarily retirement pension segments, but we also work in the broader FS world too. So as a result, we have a very broad exposure. And we see several trends among the clients that we serve, but I'll hit on just a couple that are hot right now. And while the reasons may differ, particularly between public and private sector, one trend that we see is this constant demand to evaluate your current technology and operations for the plan providers. It might be because of increasing cost of providing services in a market where fees are being compressed. It might be consolidation in the industry, where firms are buying other businesses. Or it might be the introduction of these technology disruptors that make claims of better automation and reduced human interaction. I took a look back at a listing of the top 65 record keepers from 2014, so just 10 years ago. And at least 20 of those firms have been acquired or merged in that 10-year period. So if you let that sink in for just a minute, fully 1/3 of the top record-keeping firms no longer exist in the same manner in just 10 short years. That pace is increasing with new announcements seemingly every other week or every other month. So, you couple that with concerns over cybersecurity, cloud adoption, and legacy modernization. Firms like ours are very busy helping clients map out their future technology strategy.
Yeah.
Go ahead.
I'm sorry. Go ahead, Tim.
I was going to say another trend that we've seen is the explosion of outsourcing of either technology or operations or both. On June 4th, I celebrated 40 years in this industry. When I first walked into that office in what was then called Diatron on June 4th of 1984, it was not uncommon for small firms, small administration shops to have a proprietary system. Those days are long gone in the private sector because the cost of keeping up with regulatory changes has turned it into a game of scale, size, and self-service. So, feels like the world's a lot less personal these days than it was back then. I'm sure that's probably not the case everywhere, but while there's some state agencies that have proprietary systems, the number of vendors with platforms in that space has boomed in recent years too. So at Enterprise Iron, we have relationships with all of these vendors. And what we do is help our clients identify the ideal operating model for their unique situation. It's not a one-size-fits-all type of answer. It might be total outsourcing, partial outsourcing, managed services. Might be keeping the processing in-house, but leveraging vendor technology is the best approach, instead of bearing that cost and complexity of maintaining those proprietary platforms. So these trends are all great for firms like ours, though, because there's a constant demand for our advisory services.
Well, first of all, why do you do it? And the reason is an organization that places a strong emphasis on, continuous market research and regulatory updates is going to stay competitive. And that's the end goal. You want to make sure that your name is up there with the industry leaders, as we are doing. We're competitive, and we've got the latest and greatest. So at Enterprise Iron, we regularly assess emerging trends and tools, and we adjust our consulting recommendation strategies accordingly. We attend industry conferences, participate in professional forums, and engage with policymakers. We also recommend that our companies conduct customer satisfaction surveys to make sure that they understand their client needs and preferences. And remember, your customers in the IT world are not just the participant-facing ones. They're also your business users. They're the ones who talk to the clients on a regular basis, and they understand what what's being asked for and what the clients want. So talking and having a close relationship with your business partners is going to be part of your due diligence strategy. So all of that demonstrates that that staying current and competitive is not just an IT initiative, it's a continuous investment in your people as well. And then the final point is organizations tend to get a little myopic sometimes. So if you try to do due diligence in-house for yourself, you may not understand what you don't know. Having a partner, a third party that comes in from the outside and performs health assessments and processing checks, can help you identify areas that you didn't know about. From a technology standpoint, the biggest disruptors right now are really related to AI, RoboHelp, ChatGPT, and figuring out how you can implement those and integrate them with your offerings, whether it be investment advice or responding to the changing needs of people who are about to retire by giving them retirement advice, how they should invest, how they should make sure that their nest egg actually lasts throughout their retirement. These technologies are going to provide automated, scalable, and lower cost solutions, which is going to appeal to your younger tech savvy generation. On the other hand, your older people who are tending towards looking at retirement and packing it in basically and saying, okay, I've done my due. It's time to retire and enjoy my grandchildren. Those people are looking at holistic views of their financial situation. They don't just want to know how much money they have in their retirement account. They want to know how much are they going to get from Social Security, what other investments do they have, what other income can they count on, and they want their retirement advice to reflect all of that information, not just the single point of how much money do I have in my 401k plan. Now, disruptors are not just technology. You've got generational disruptors. Your iGen and Gen Zers want instant access. They want to do their mobile phones. They want to have a quick bit of information pushed to them. They don't necessarily want to go in and try to dig around and put a lot of thought into it. They want the company to reach out to them and prompt them of, hey, you need to look at doing this to your account. On the other hand, your older people, your boomers, your Gen X, and now bringing towards the millennials, they're looking more towards wanting hands-on customer service. They want more people interaction. They may or may not be as comfortable with technology. They can be frustrated just by your simple voice response systems, because they want to get to a real person who can talk to them and get deeper than just what's my balance. So these diverse goals are forcing companies into new heights of flexibility in their service offerings to make sure that they satisfy all their clients rather than just focusing on one group. And the final disruptor is, of course, legislation. Secure Act 2.0 just came up a year or so ago. That's we at Enterprise Iron looked at the Secure Act legislation, and just looking at things that were going to require changes to the record keeping system and the way you did business, there were 147 different changes that were quite detailed, and it put out the possibility of introducing literally thousands of new plans that represent a new opportunity for businesses to pick up and start servicing and get more business on their bottom line. So you have to keep up, not just with your technology disruptors, you have to keep up with what's going on with legislation. And that's again where a partner can help you identify what needs to be, what is important and where you need to focus and what's likely to come out of left field and catch you off guard.
Next up, we discussed a closer look at value investing. Let's take a look.
Yeah, so I'm a big believer in diversification, so I think you need to have growth and value within your portfolios. As I alluded to in segment 1, with inflation being more predominant than it's been really for the last 20 years, it's even more important to have value exposure now, given that value historically has done better in an inflationary environment. So I think you need both all the time anyway. I think it's even more important now that you readdress and make sure you have the proper value representation in your portfolio, given that value typically does better in an inflationary environment historically. I'm a big believer in our contrarian value strategy, but having a 5 to 7 year time horizon is very different than what you're going to hear about in the media. And I think that's a competitive advantage. The returns are less correlated with the overall market, given the contrarian nature and the long-term time horizon. The focus on valuation gives you downside support, so you don't have as much risk over a long period of time horizon. I think within that framework, you want to have value. You want a long tenured manager, because it's going to diversify your returns and give you exposure that maybe investing just solely in growth will not give you. I personally believe in diversification. I can't predict the future. There's a lot
Really?
of things that
Me
happened
neither.
a lot of things happened the last 10 years that I couldn't predict. So I do think, innovation has been remarkable the last 10 to 15 years. With that said, inflation is here. I see a better backdrop for financials, for some energy stocks, for some consumer staples. So I really do think you want a diversified portfolio at this point in time. And that's going to give you your best risk return, particularly over a long period of time, which is what these retirement products do for you. Really trying to understand the investment process and the strategy. That is really kind of the foundation of any investment fund. So, looking at the investment process, does it make sense to you? Is it repeatable? For a value investor, typically the most, our biggest Achilles heel are value traps. How do value investors, particularly in each fund, address value traps and try to limit those? And then, the final piece is, really what is the tenure? Typical value investors have longer time horizons than growth investors. So, hey, do I have a management team that's been in place a long period of time that's been able to show, hey, they can execute on this strategy. It's consistent. It does what I expect. So it may be out of favor at certain times because it's contrarian, but relative to my overall portfolio, it's really adding value over a long period of time. And I really do think, there's a lot of product out there, but looking at this, how good that investment process is, how long has that team been in place? How repeatable is this? I think is very, very important, in what is a very, very competitive environment. But ultimately for your 401k and retirement type vehicles, you want to have anti-correlated returns. You want a great risk return over a long period of time. So you can afford to have the patience, which kind of feeds into value investing. And I think that's going to give you the best experience and give you your best retirement outcome at the end of the day.
And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to? Drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, then visit our website. We're back again tomorrow for another edition of BRN Sunday. We'll be joined by the Legal Eagles, David Levine and Kevin Walsh of Groom Law Group, and Oliver Rennick of the Schwab Network. So until then, I'm Jeff Snyder. Stay safe, keep on saving. Don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.